a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about two new very interesting ETFs. And this year we have seen a shakeout in the ETF industry amid this pandemic and rising market volatility. And there have been about more than 170 ETF launches this year and more than 170 ETF closures too. In fact, ETF closures are slightly ahead of ETF launches this year. And this is nothing surprising because most of the closures this year, they are either exchange traded notes or leverage and inverse ETFs, which are very risky products, and those that are linked to oil. Those are among most of the closures. And this is a routine practice in the ETF industry. If ETFs fail to gather assets, usually more than $50 million, then ETF providers close them and they come up with new products. So that is why I usually recommend that investors should, wait a little bit before investing in new ETFs till they get assets over $50 million. Then it's usually safer because if a product closes, then you may have tax consequences or just an inconvenient timing. And also, I usually recommend that investors should understand the differences between ETFs and ETNs, which are exchange-traded notes. And they should also understand the risk associated with investing in inverse and leverage products and ETNs. So the two that we are talking about today, these are new ETFs and they have been really successful. Investors really like them, and that is why they have gathered a lot of assets within a few months or even few weeks of their launch. And the first one that I will talk about is a sports betting ETF. It's the first ETF that provides exposure to sports betting. And the second one is telehealth ETF. So we know that in 2018, Supreme Court had cleared the way for states to legalize sports betting, and sports betting is legal now in many states. And most Americans, in fact, favor sports betting, and Goldman Sachs expects sports betting to become a $20 billion industry and iGaming or online gaming, gambling to become a $9.5 billion industry in the coming years. So the ETF is definitely worth a look. And the second one, which invests in telemedicine companies, we know that that is also a very hot trend of late because of this pandemic, because many patients do not want to visit doctors' offices for routine care. And some of these habits and trends will become permanent because the pandemic is changing our habits and preferences. So we may see greater adoption of telemedicine in the post-pandemic world too. And in fact, Global X expects the market for telemedicine and digital health to grow to $657 billion by 2026 from $175 billion in 2019. So let's take a look at these ETFs by going to quote page on Zacks.com. So the first one, as I mentioned, we are talking about is by Roundhill. It is Roundhill Sports Betting and iGaming ETF, ticker symbol BETS. Very easy to remember. It's the first sports betting ETF, and it's been very popular with younger millennial investors, Robinhood investors, because they like sports betting and they like to invest in what they like to do. So that is why it has been very popular. It has been able to attract 94 million in assets, though it launched just in June this year. And it charges an expense ratio of 75 basis points. To learn more about this ETF, you can go to the quote page on Zacks.com. And from there, the external homepage, and you can learn more details. You will see that this has a lot of international exposure because sports betting and iGaming, which is online gaming, those are global trends, and a lot of international companies are prominent in this space. So that is why you will see a number of companies that you may not be familiar with because those are international companies, but you also see Penn National Gaming, DraftKings, two companies which are very popular with millennial investors and which have done very well this year. They are among the top holdings. Now, the second one that we are discussing today is by Global X. And Global X is a leader in thematic ETFs. They're very interesting cloud computing, robotics, Internet of Things ETFs. And they recently launched this telemedicine and digital health ETF. This charges 68 basis points. And this launched just about a month back, a little more than a month back, and has already attracted more than 330 million in assets. So one of the most successful launches this year. And if you want to learn more about this ETF, you can go to the quote page on Zacks.com. You can read our articles, other details. For bets, I had done a podcast with the provider, so you can listen to that one. And for eDoc, I will be planning a podcast soon. You can also go to the external homepage, the Global X web page for this ETF and learn about more details. And as you will see, healthcare is about 81% of the ETF. Information technology is about 16%. This also has a lot of global exposure, a little less than 20%, not as much as bets. But among the top holdings, you will see a lot of companies that you may not be familiar with. But those are global companies and US companies too, which are very, prominent and fast growing in this telemedicine and digital health space. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. And also make sure to subscribe to our videos so that you don't miss anything. And I'll see you next week.